The earnings season is upon us, and the big question before the market is, will this finally be the quarter when we will graduate to a high single-digit growth, or I dare say even a double-digit growth? Over the next 1 hour, we will discuss what we can expect from this quarter. Hello and welcome to our earnings special Quarter Se Quarter Tak. I'm Lata Venkatesh, with me Surabhi Upadhyay.
Hi Lata, absolutely. You spelled out, I think, the theme of Quarter Se Quarter Tak for this quarter.
Absolutely.
So here are some of the key questions that we are putting forward for you. The first question we are asking on the show today is, will the Nifty see double-digit earnings growth in Q2, or will demonetization and GST continue to play spoilsport? Will they continue to haunt the numbers in the second quarter? Third, will Nifty earnings estimate for FY18 and FY19 be lowered even more? And finally, which sectors will lead and which sectors will act as key drags on corporate earnings this time around?
And joining us now to answer all those questions and more over the next 1 hour are Sanjeev Bhasin, Executive VP, Markets and Corporate Affairs at IIFL, Dhananjay Sinha, Head Institutional Research at MK Global Financial Services, and Anish Damania, CEO and Head Institutional Equities at IDFC Securities.
Well, let's straight away get to Varinder Bansal first up, who's standing by with what we can expect from this earnings season. Varinder, the big question is whether we are going to see some hints of a revival this time around.
Well, thank you so much. The big question clearly is whether the earnings will revive in second quarter or not. Remember, first quarter earnings were hit. Nifty aggregate profitability was down by nearly 11%. And of course, the economy is battling with demonetization, GST and RERA as well. So this time, analysts on the street are, hopeful that, Deutsche Bank, of course, if I just can quote them, that the aggregate revenue for Nifty revenue could increase by 8%, EBITDA by nearly 13%, and profitability by nearly 17%. Even if these numbers are achieved, remember the first half earnings for Nifty will be up anywhere between 1 to 2%. So there's a lot to do even in the second half to achieve that double-digit mark, which the analysts expected at the start of this at the start of this financial year. So what could lead the rally? Clearly commodities. Commodities will be the one where we'll see huge, upsurge in terms of numbers because of the low base. Energy is the one to watch out for. Metals, they have been strong all throughout, so watch out for that as well. And the private financials are the one. The numbers will come on your screen. How much growth in terms of revenue, EBITDA and profitability it could come. The sectors which could lag are clearly telecom and pharma. Watch out for them. They could be the one which could see more pain, especially telecom in this quarter.
Okay. Well, thanks a lot for that overview, Varinder. In a bit, our entire research team will join us, with each of them giving us one sector-specific earnings expectation. But before I go to our IT sector, let me get Sanjeev on this. Sanjeev, what are you working with as an earnings growth for the quarter and for the first half?
Yeah, hi. So Lata, we think this quarter, if you get away with something like 450 rupee earnings on the Nifty, it will be a very, very big surprise. I see low single digits. I don't see 7 or 8 being crossed. And we are aware of all the, headwinds which we have. Already you've had 2 companies which are large bellwether which have already warned. So that was HUL on the consumption side and L&T on the capex side, which was telling you that this quarter is maybe a washout for some of them. There will be some bright spots like you mentioned, metals, commodities, oil and gas, and select autos and private banks. But more or less, I would expect 450 to be the target. And, this quarter could be quite a washout.
Okay, expect a washout quarter, says Sanjeev. Let's get in our other experts as well. Dhananjay, thanks for joining us on the show. Let's get your estimates in. Single digit, mid-single digit, high single digit, flat. Where does the number stand for Q2?
So for our universe, if you consider the non-bank and non-oil sector, the earnings growth that we are sort of looking at is close to 9.5%, a top line growth of something like 10.2%. EBITDA is growing at something close to 10%. Overall, if you look at it, there does appear to be a sort of a considerable skew in terms of sectors that are contributing, largely relating to metals and autos. So if you remove that, then I think the numbers are pretty modest. So it's a very skewed quarter. There is a sort of a modest decline in the margins, but it is still a mixed thing. We'll have to see whether going forward with the rise in commodity prices, will that translate into a sustainable earnings growth? And my hunch is that you might, on the one side, you have a sort of a demand stimulus led by larger government spending. You also would have a scenario where margins will be under pressure because of the increase in raw material prices. Okay. So I think in this quarter, since you have a dislocation relating to GST, an inventory built up, inventory run down, all those things have happened. So I don't think this quarter will necessarily replicate or sort of symbolize what will be the trend going forward.
Okay. Well, I'll come back to how disappointed the market will be if the numbers indeed turn out to be flat. But just a quick number from you, Anish, before we get to the sectors. What is the first half growth and what is the second half growth you're currently working with?
Yeah, so what we are looking at is an IDFC universe growth of about 9% for the whole year, which is about 3% growth for the first half and about 12% growth for the second half. But having said that, this quarter in particular, we will be seeing a 6% growth in Nifty estimates and about a 4% growth in the IDFC universe estimates. Now, having said this, it always masks, these aggregates always mask the outliers and always mask the performing and the non-performing stocks. So what I see is that all the asset-based industries, which we have been talking about for quite some time now, for the last 1.5 years, that asset-based stories are going to perform, and that's exactly what is also getting reflected in the numbers. So if you look at the commodity segment, which is an asset-heavy segment, is expected to report an extremely robust growth. About a 20% growth in earnings is what is expected from all the commodity-based sectors. So non-commodity-based sectors is something which is going to report declines in profits. So, what we are saying is that when you look at the 5.9% growth, actually the low PE companies are actually reporting better growth than the high PE companies, which means that if at all the market moves up, actually it's a PE re-rating which is happening and not in line with what we see as the earnings growth is. Okay. So from that perspective, when I look at it, then I find that you find that the commodity-based space is where you will see more upsides, and with the commodity prices staying firm, you will continue to see more upsides in the stocks also relating to this space.
Absolutely. 8% I think up move in average sort of price of oil when the quarter started to where we are. On that note, let's actually get down to individual sectors, and our colleague Anisha is now standing by to run us through the preview for the IT sector. Anisha, what will the biggies deliver?
Well, yes, the IT sector does have tailwind in terms of favorable currency movement, but the headwind in terms of growth concerns regarding BFSI and retail are here to stay. That is why the analysts are expecting a weak quarter, with Kotak saying the constant currency growth for the sector can be anywhere between 1 to 2.5%. Now, HCL Tech and Tech Mahindra are expected to lead the pack. Nomura, in fact, expects Infosys to cut the guidance for constant currency revenue growth to 5.5 to 7.5%. Margins are going to be company specific, with the wage hike as well as visa costs coming into play. And lastly, if you look at the key thing to watch out for, Infosys will be the key thing, because the new future strategy will be laid out by Nandan Nilekani. Other than that, the deal pipeline as well as the growth commentary on BFSI and retail would be keenly watched out for. Back to you.
All right, thanks a lot for that, Anisha. Let me quickly get some expert comments on it. Sanjeev, what will you watch out for in the IT space? Which company?
So Lata, two names, HCL Tech and Tech Mahindra, which have always delivered in the last few quarters and which sounded very optimistic. And in the mid-cap space, a Mindtree. But as a value proposition at 900, as a disclosure, we've been positive on Infosys. We think you could get a 8 to 10% upside in the stock price. Maybe the results and the guidance could be muted.
Okay, Dhananjay, you want to come in on this? IT, considering the kind of move that we've seen, Infosys for that matter, I mean, there's a different tailwind of the buyback that's supporting that stock. But will there be anything material in terms of the business which can move the needle for the stock price?
So I think, you know, you have a sort of a turmoil that we have already seen, and that's past now. I think the management is trying to sort of resurrect the confidence and try to sort of communicate that there will be no impact on continuity of existing clients after Sikka's exit. My broader sense is that you might actually see a sort of a change and a certain level of dislocation that will happen from a strategy standpoint, and whatever thought process Sikka had, whether that will undergo a change. Whereas it is communicated that the continuity will be there, I have my doubts it will be there. So I think there will be uncertainty that will continue from Infosys standpoint. So we are somewhat sort of cautious on that. Clearly, the only tailwind that we see is this whole inducement by giving high dividend payouts and stuff. So I think those are temporary things. So I think investors will look beyond that, and I think people will look at structural issues, the management issues, and top level management guidance and future strategy. All these things will be very critically watched as far as Infosys results are concerned. So I think that's a very critical sort of stock to really watch. And our view is that you know, you will have a mixed bag with respect to the IT sector results. You have a sort of a positive inducement or impulse coming from cross-currency tailwinds, whereas you also see a sort of you will also be looking at increase in wage costs. So there is a mixed thing with respect to the margins, but I think generally the margin pressures are going to be there. Our own sort of assessment with respect to longer-term strategy and also from a near-term result standpoint, there are 3 stocks that we have been positive on. Those includes L&T, Infotech, Mphasis, and TCS.
Okay. Got that. Thanks, Dhananjay. Very quickly, Anish, what is the one thing you will watch out for in the IT results? Will it be client orders? Will it be margins? What's the one parameter? Anish?
No, I think very clearly, if you look at the street is extremely... can you hear me?
Yes, please go ahead.
The street is extremely negative on the IT pack. The street is extremely negative to cautious on the IT pack. So even a small surprise there could mean lots for the stock. Like for example, Infosys, where I think most of the analysts would be guiding for either no growth to a very, very small growth scenario in profit. And if they are able to show something in a particular quarter, then probably you'll see an upside in the stock. So I think as far as IT goes, I think there are 2 or 3 stocks which I would like to focus on. One is Tech Mahindra, and the second one is Mphasis. I think these are stories which we feel are good for next 2 years, and they will continue to report better performance as we go forward. I think in terms of the large caps, we are seeing very erratic performance come through every quarter, except for HCL Tech, where we have seen a stronger performance come through.
Fair enough. So HCL Tech, Tech Mahindra, Mphasis seem to be the favorites at this point in time. To oil and gas. Well, analysts are expecting the energy sector to see good numbers. Varinder, back with us. What all should we watch out for, Varinder?
Well, thank you so much. Energy could be one of the best sectors to report numbers. Clearly because crude was up 2% on quarter-on-quarter basis. Singapore refining margins was up 30% quarter-on-quarter because of the Hurricane Harvey, which is there, and still they are moving up closer to $9 per barrel. And of course, the low base inventory gains in the OMCs will be helping these companies. If you're watching out for numbers, Reliance, the GRMs are expected to be nearly $12.5 per barrel, which is up 4% quarter-on-quarter. Stable earnings coming in from there. Of course, Jio will be more important to watch out for in terms of commentary. ONGC, as I said, upstream companies could be important. Profit increase of nearly 34% for ONGC on a quarter-on-quarter basis, and the net realization could improve by nearly 4%. It will all about OMCs. Remember, last quarter, HPCL gave very strong numbers, followed by by IOC and BPCL. Even this quarter, most of the analysts on the street are expecting GRMs of anywhere between $9 to $10 per barrel for OMCs. The inventory gains will be the surprise factor to watch out for. So watch out for them. In terms of gas, stable earnings this quarter is everyone expecting, whether it's GAIL or Petronet. IGL, stable volumes is what people expect, but gas is a theme which people want to play now away from the OMC. So a strong quarter this time from energy sector is what is expected.
Yeah, absolutely. That could be the kingmaker sector, right? And that's exactly what all our experts seem to be in agreement on. Oil and gas is going to be the watch point. So, Sanjeev, let me actually come back to you. As Varinder was also pointing out, stocks have already run up. I mean, many of them are close to their 52-week highs. So where is it that you're expecting the best of oil and gas earnings? And therefore, what could be the most interesting stock to play?
Yeah, so the upstream companies, ONGC and Oil India, we have been very, very positive. ONGC at 160 and Oil India close to 325. They've moved up about 10 to 12%, but we still think there's a 20% upside in both those stocks. Reliance is a no-brainer. We know GRMs have been strong even in when prices were low, and now you've had because of the hurricane and dislodgement, you'll see much further gains. Surabhi, the dark horse again will be the gas utilities. They've been in a very, very sweet spot in the last 3-4 quarters, and all three, whether it's GAIL or IGL or Petronet LNG, I think price and volume both will be very, very favorable. On the OMCs, I think this time there could be some gains on the inventory side. So HPCL and IOC could be dark horses which can outperform over there.
Okay, well, we'll have to keep it to only one person for this sector out of time. Taking a break and we are coming back. When we return, we are going to tell you what to expect from banks, metals, auto, FMCG. So stay right there, tuned into Quarter Se Quarter Tak.